Hi everybody, this is Massimo Morelli from Trading for Purpose. Today I would like to give a deeper look at gold. For I think right now the situation is very interesting. In a period of great uncertainty for equities, many investors are looking at gold as a safe haven, and the sentiment right now looks very bullish. Well, when I examine this market, I don't see many reasons to be so bullish, and I would like to explain you why. First of all, I would start with the COT. This is a tradition, the legacy COT, the old-fashioned COT, and this is 3 years period. And you can see that the commercials, they are the blue line. They have never been so bearish during these 3 years. They don't agree with this price level. They think it's too high, so they're bearish. They are hedging. The funds have pushed the gold up, but right now they are in a historical very high stance. And probably they don't have much power to rise much more than this. So I think this COT graph is very bearish, but you could say, okay, this is the legacy one. What about the disaggregated COT? Okay, let's have a look at the disaggregated, and which is even more interesting in my opinion. First of all, okay, the lower study here is the disaggregated COT. The upper is the legacy, but let's look at the lower study. Okay, producers. Producers again have sold this market during the last rise, and they have got a very bearish stance right now. But what is even more interesting, in my opinion, is the movement of the swap dealers. As we know, the swap dealers invest on behalf of large funds, especially pension funds. So what are the pension funds doing during this last rise in gold? They are selling this market. It is the green line you can see here. They are selling this market. The managed money have allowed this market to rise, but right now they have finished the fuel. So also the disaggregated COT doesn't look very bullish to me. But okay, let's look at seasonality. Is gold seasonality bullish? Well, if I look at the 5-year chart, no, I don't think so. We are here right now. The first seasonal impulse is finished, and we are entering a period where gold is moving sideways or downside. This is true in the 5-year seasonality chart, in the 10-year seasonality chart, and in the 20-year seasonality chart. The first impulse is finished, and right now it is moving sideways. So also seasonality doesn't look very bullish. Okay, let's look at the chart. Here we are with the chart. We have seen from the beginning of 2016, we have seen the end of bracketed market, and we have seen the gold rising almost parabolically. But right now it looks close to an end. Why do I say this? Okay, first of all, we see that gold has established a a resistance level here at about 1260, and retesting this level Friday it formed this candle, which could be called a shooting star, or if we talk with the volume spread analysis terminology, it could be defined either a pseudo upthrust or even better, in my opinion, an inverted stopping volume bar. You see, the price has risen with very high volume, but then collapsed and closed in the lower side of the candle. This is a typical bar which defines the end of a trend, or okay, at least fatigue in the trend. So this chart doesn't look bullish as well, and in these cases I always look at another indicator, which is the ratio between gold and dollar. We can check it out. Okay. Until this point here, the ratio has been very favorable to the dollar, but this ratio reached an extreme level and the market reacted. From this point on, the market reacted, and after a while we had a sideways period, and then it started to the bullish rise. But you know, the 11th of February reached a very high level, and the ratio touched another extreme level, too favorable for the gold in relationship to the dollar. And right now the market started to feel this difficulty. And okay, Friday, this ratio touched again the lowest level, and this is showing us the possibility for this market to invert its course. So, what to say? It might be that gold will rise in the future, but right now I would wait for a retracement. This retracement could be about here, 1220, or lower, 1180, 190. If we look at the market profile, telling the truth, the point of control is even lower, is down here, but I think it's too much. I would wait a retracement until the 1190 level, more or less, and then okay, we should check the situation again. That's all. This is Massimo from Trading for Purpose. Not very bullish about gold. Ciao ciao.